recorded an oversubscription of more than 444 million Ghana cedis, with investors submitting bids worth 887 billion Ghana cedis against a government target of 5.442 billion Ghana cedis. And, while this renewed demand is certainly encouraging for government financing, there's another side to the story, which is that the interest rates across all the treasury bill tenors also moved higher, meaning the government is now paying more to borrow. The 91-day, the 182 and the 364-day bills all recorded increases in yield, with the 1-year bill experiencing the sharpest jump. So what exactly explains this sudden rebound in investor appetite? Why are yields rising even when demand is strong? What does this even mean for government borrowing, businesses, investors, and the broader economy? To help us unpack all of these, Emmanuel Boating, our in-house economic analyst, joins me over the phone lines. Ima, good morning.
Yeah, good morning, Nii Trebi.
How are you doing, my brother?
Yeah, I'm doing fine. How about you?
Yeah, I'm doing well too, by God's grace. Belated happy birthday.
Oh, thank you. Thank you.
Yesterday you had a lot of fun, I guess.
I don't know what you call fun, but
I'm referring to what you call fun.
Let me not comment.
Anyway, but I wish you the best. I pray that this new year will bring you a lot of good things. Whatever you've been praying and hoping and wishing for, the Lord will remember you and do it for you. Yes, may you receive blessings on every side. May the favor of the Lord be on you. May he make every crooked path straight for you, and may he order your steps in this new year. Only good news will your ears hear in this particular period, and you will only testify of the good things of the Lord and not share bad news. In Jesus' name, amen.
Amen. Were you reading from somewhere?
I'm reading from my heart.
Oh, I see.
Yeah, this is from my heart to you. So
thank you.
All right, anyway, so let's get into our conversation this morning. So we're talking about the market. Very interesting things happening. We know that the treasury bill market has experienced 2 weeks of under subscription, but we are seeing that it has returned to oversubscription after that 2 weeks. What exactly does this mean, and why is it significant?
Well, thank you. Good morning to all our cherished listeners. And welcome everyone to our discussion this morning. I think that when we talk about oversubscription, we are saying that investors are actually offering to lend more money to the government than what the government is actually asking for. In this very auction, government sought to raise about 5.4 billion Ghana cedis, but they received bids of about 5.9 billion Ghana cedis. Now that tells us that investors' appetite were stronger than the government's borrowing requirement. So you go say you want to borrow 10,000 Ghana cedis, and the bank says, "Oh, do you know what? We can give you 50,000 Ghana cedis." That's exactly what we are talking about this morning. Now, you see, the significance lies in what this has to do with market confidence. Now, treasury bills are generally risk-free instruments. What that means is that it's a very safe investment in Ghana, since it is backed by government. In other words, you are borrowing from government is obliged to pay you back, and so when you see investors willing to commit more funds than it is required, well, I mean, it generally would mean that confidence is strong in the ability of the government to repay what they are borrowing from us. It is also important because the government heavily relies on the domestic market to finance its short-term expenditure and manage its cash flow. And by that, an oversubscribed auction would mean that government has the flexibility and can therefore choose which of the bids to accept or reject. But it is not conclusive in itself. It's very important to add that one auction does not mean a trend. It does not establish the case of a trend of oversubscription. Now, why do I say that? In the past two auctions, the market was undersubscribed. So there is uncertainty. You've had 2 weeks of undersubscription, 1 week of oversubscription. I mean, that is the kind of trend you are seeing, ups and downs. And perhaps it is a response to changing economic behavior. So the key question now is whether this latest result reflects a sustained return of confidence, or is simply, temporary liquidity conditions, within the financial system. Yeah, more of that.
But what factors may have contributed to the renewed investor confidence we are seeing?
Well, a number of them. The first, which will be liquidity. I've always said that you only invest if you have the money. So liquidity is very important. And if liquidity conditions in the banking sector improves, we will see that. I don't know, maybe for you this morning, there's a lot of cash available to spend and all of that. So you can afford to invest in the table market. Yeah. And generally, we know the drivers of the market are the institutional investors and all of that. And when they have excess cash, now treasury bills become so attractive to them. The second factor we can consider is anticipation of higher yields. If investors had anticipated that the yields would be higher, and therefore they are increasing their participation because, like you did say that in the beginning, that the yields had moved up. And yields are a driver. Usually people will even invest when they know what the interest they will get is.
Yeah.
Some people just look at that. Although we do say that, don't just look at the interest, but also consider the rate. So that is also another major thing that people look at. You see, if they expect the yields to rise, they may seek to lock in returns before the yields begin to fall or stabilize again. The third option will be the fact that it's a very safe instrument. The government will not default on it and the like. So when you invest, you are going to get your money back. Another factor that drives participation in the T-bill market is the fact that investors may know of very limited investment, vehicles or financial instruments that they could invest in. And if the returns in other financial assets are not as good as they see with the T-bills, then of course they would invest in the T-bill market. Yeah, so this is the story, and these are the factors that drive it. And of course, given that the economy is performing well, that will also push investors to have so much confidence in the T-bill market as well.
I see. Now, but we are also seeing that the yields actually increase across all the tenors. Why would borrowing costs rise when investors appear eager to lend?
Thank you very much for that question. I think that it may appear a bit contradictory. You see, demand and pricing do not always move in the same direction. Investors may be willing to lend, but only at a higher return. You see, the rise in yields suggests investors are seeking compensation for perceived risks, for inflation expectations, future interest rate movements, and so on and so forth. The investors are saying they are willing to lend, but we are willing to lend at the right price. Now, if all of us in the Ghanaian economy believe that, the inflationary pressures that exist now indicate government is not done dealing with inflation. Inflation still stands tall as Goliath. And the Davids of our days have not found a way out of it yet. It also has that implication. You see, if inflation rises in the future, then investors want higher yields today so that they can preserve the real value of their returns. Otherwise, what their investments will be worth after that 3 months, after that 9 months, after that 6 months, after that 12 months, inflation would have eaten all of that up. I don't know if you get what I mean.
Yeah, I get it.
So if I expect that prices will go up in 9 months, why do I keep saying 9? in 12 months, then I would want you to compensate me higher so that at maturity, which is 3 months from today, 6 months from today, and then a year from today, what I would have will be able to deal with that. Look at the sharp increase in the 364-day bill yield. It's because longer-term investors tend to be more sensitive to future economic uncertainties. That is for 1 year. So while demand remains healthy, I think investors are exercising greater bargaining power and demanding improved returns from the government.
I see. Maybe to double click on that, still on the 364-day bill you just mentioned, we're seeing that it recorded the sharpest increase in the yield. I'm curious to know what message does that send about investor expectations?
You know, the T-bill market is a market for short-term securities. And so generally, the 3 bills, 91, one is due 364, are all short-term financial securities. But among the short-term financial security is a long-term short-term financial security, which is the 364-day bill. I don't know if you get a point.
Yeah.
So it's the one that takes the longest time to mature. Now, that rise suggests that investors are becoming very more cautious about economic conditions over the coming years. They're concerned about inflation, the risk that inflation will go up. They're concerned about exchange rate dynamics. In fact, currently it has been depreciating bit by bit, and they may be concerned about the fact that governments may not be able to raise enough revenue to finance it, fiscal obligations and the rest of them. Even the possibility that the interest rates could remain high for a long time, they could be expecting that. So by demanding higher returns on longer-term instruments, investors are essentially pricing in that level of uncertainty they see 1 year from today. So they just want you to compensate them for that risk that they are taking. You see? And I think that it doesn't mean the investors are pessimistic, kind of. No. They are just prudent in their risk management efforts. Very, very important.
I see. So essentially, what that means is that because they are taking they can't tell what exactly is going to happen a year from now. They just want to trust that things will get better. So they must be compensated for that, right?
Precisely so.
I see.
No, take that again.
No, so I'm saying that, so the 364-day bill, you're saying that is the longest tenor, right? And what that means is that if anybody is investing today for that long period and they are not too sure about what exactly is going to happen, they are taking a very big risk. And because they are taking a big risk, they must be compensated for that particular risk. That is what you're saying.
Yeah, that is right.
Okay, right. So now, what does this latest auction generally also tell us about liquidity conditions in our financial system generally?
Well, liquidity is much like money supply. Is the issue of how much cash is available within the financial system. So the fact that investors submitted nearly 5.9 billion Ghana cedis in bids suggests that there is still substantial liquidity available, Is it banks, pension funds, other institutional investors? All of them appear to have sufficient funds to participate actively in government auctions. However, liquidity can fluctuate significantly from week to week. And that may explain why recent auctions have alternated between undersubscription and oversubscription. That is a possibility, Now, the volatility suggests that liquidity is not evenly distributed across the market. Some people may be timing their participation in the T-bill market based on what? The interest rate. Like, everybody has a basis for which they come and invest in the T-bill market. And liquidity is certainly one of them. So I think that liquidity is high currently, but the way in which people are choosing to use their money, I think, is quite selective. It's not. I think there are people who may even have a lot more money, but Nii Trebi, chances that they invested in the T-bill market is even low. They may not have done so. There are people who are in there because they have a lot of liquidity. Yeah, more or less.
I see. All right, Iman, let's talk about the broader way to even look at this, and I'm talking about government financing generally. How important are treasury bills, treasury bill auctions to government financing and fiscal management?
Well, they are important because I mean, that's the first one I want to make, that they are important, because if they were not important, well, government would not even come and borrow money to finance its activities at all using the T-bills and the like. I don't know if you get what I mean.
Yeah.
So that sheds light on some level of importance for government T-bills. Now, the point is that you need money to fund your developmental project, to fund your government expenditure, your commitments, the promises you made to the Ghanaian people. I've always said that the way you get the money is either through the taxes you raise, the revenue is raised from taxation, let me put it that way. If that revenue is not sufficient to meet all that you want to spend on, then you need to borrow. And there are different markets that you can go borrow from. You see? And the T-bill is one of such markets, short term. So if you are having cash flow issues, the T-bill is what helps you. They provide a mechanism for smoothing government cash management. It's very, very important to them. They help you to be able to provide the essential services to the people. You can fund your infrastructure projects, pay your debt obligations, and what have you. And so when the auction results appear well, they perform well, when the auctions perform well, government enjoys greater certainty in planning and in budgeting. And the reverse is also true. When the auction results are poor, when auctions are weak, then they can create some financing pressures and complicate fiscal management. You see? Yeah. Let me add that if government also borrow too excessively from the T-bill market, and if we see evidence of that, it's likely they are crowding out the private sector. Why? Because banks and others would come and be lending to the government rather than what? Lending to the private sector, which should be the engineer of growth. And that is why policymakers also monitor every auction result and view sustained investor participation as a very critical component for them.
I see. Right. So government depends on that heavily. But so should government be concerned about the recent pattern of moving between oversubscription and undersubscription? Is that something they should be worried about?
Even with that, the question will be, are they concerned? Yeah, I think they are concerned. Yeah, because
could that be why we are seeing the increase in the yields?
Yes, the yield is only increasing because the government agreed to pay those who are lending the money to them that amount. Sometimes government is doing, maybe they want to raise 5 billion, they receive 3 billion auctions, right? And they even reject some. Or you how can you remember?
Yes. Oh yeah, I remember
things like that do happen.
Days, yeah.
Why is it so? It is so because the yields those investors were asking for was above the threshold that the government could pay, and therefore they reject them based on the yield. Even this auction, some of the bids were rejected. Isn't it so? Yeah. So that is the whole point. So it's the bids are usually rejected when what you want is different from what the government wants to give you, kind of. So they do pay close attention to these. And they know that when the auctions are swinging frequently, it means investors remain very sensitive and can change quickly in response to economic development, you see, and all of that. If it becomes unpredictable for them, their planning abilities will be curtailed significantly. It becomes very difficult to forecast, borrowing outcomes and manage your financing needs very, very, very efficiently. So that is quite critical to them. Yeah. So for me, I think that while the latest oversubscription is positive, the government will be looking for evidence that demand can remain strong over several consecutive weeks. They are very interested in that.
I see. So what impact could the rising yields really have on the private sector? What impact could that have?
Hey, I think I just spoke about that. When the yields are high, that is attractive.
Right.
And so banks will move in there. But Nii Trebi, think about it. If you were a bank, would you rather lend to the government? Because it's lending money to the government, who is like 99% likely to pay back, and get 15%, or you would rather lend to Kojo Mensah, who stays in Kojo Krom, who is 90% likely not to pay back at 20%. Who would you lend to?
Right.
Oh, I want to know who you lend to.
It's the obvious, of course. I mean, the institutions.
I don't know which one is obvious.
The institutions, of course.
So that is the whole point. So the question you were asking is that if the interest rate is high, where would the government lend their money, and would it have implications for the private sector? It won't. They will lend it to the banks. The banks will lend it to the government, rather than to the individuals. And that is why during periods of high interest rates on T-bills, I'm sure you know there is a relationship with the interest rate on bank loans as well. That also shoots up. See? And so there is that intense competition for the available funds within the financial system. And that will raise the borrowing cost for businesses. And so if you're a company, you want to expand, you need some credit, you need some working capital investment and all of that, you need to pay more to get it. And as you know, when the borrowing cost goes up, it would also influence market interest rates, and that will affect everything from corporate loans to mortgages and what have you. If this sustains, rising yields could slow private sector investment and economic activity, particularly among SMEs.
I see. Right. Okay. Maybe two more things, and then we can go. So what does all of this mean for ordinary investors and individuals who are looking for some safe investment opportunities?
Well, I said they should invest in me, but I think that. Why are you laughing? I'm about investment destination. Well, I think that generally for individuals, you see, when interest rates on T-bills are rising, that's good news because your returns are high. Because the instrument itself, the T-bill, is a very low-risk instrument. And it's very accessible, very secure and all. Now, the increase in yields will mean investors can earn more income from their savings while maintaining a very high level of capital security. But I don't think investors should only focus on nominal returns. I think what ultimately matters is the return after accounting for inflation, what we call the real return. So if inflation rises faster than investment returns, then your real purchasing power of those earnings may still decline over time. So look at the inflation rate and look at the high returns as well, and see if the returns on the T-bill is higher than the inflation rate. Then you know you are getting something. Otherwise, you are just taking one step forward and two steps backwards.
I see. All right. So very, very important. So looking ahead, what indicators should we monitor to, determine whether this oversubscription trend is sustainable?
Well, you need the oversubscription itself to continue for several weeks. That's one.
You mean
Second,
you mean future auction of performances?
yes, future auctions.
Mm.
Because that will mean investor confidence and all of that.
Right.
You have to monitor economic indicator trends, inflation, and the rest of them.
Mm.
And you know how inflation drives investor expectations and interest rate movement. So you need to look at that.
Okay.
Now, look at government revenue. Is he able to raise it? If it is doing well in its tax efforts, there will be little incentive to borrow from the T-bill market. That's the point. The government has a very high incentive to borrow from the T-bill market because it is not getting enough money from taxes. The stability of our currency is also important because currency volatility often influences investor decisions and inflation expectations. So you need that as well.
Right.
And I think finally attention should be paid to monetary policy decisions by the Bank of Ghana because changing in policy rates and liquidity management measures can influence T-bills. So I think that these indicators will help to determine whether the latest oversubscription is the start of a more stable phase for the T-bill market or simply another short-term fluctuation in a evolving economic landscape. If you ask me, it is not a first start to anything. It is the fluctuations we will keep seeing.
I see. All right, Ima, thank you very much for your time this morning. I'm really grateful. Do you have any final words or we're good to go?
I think we are good to go.
All right. Okay, thank you very much. Please do enjoy the rest of your day.
You too.
All right. So that was Emmanuel Boateng, our in-house economic analyst, and he joined me this morning. We spoke about the Treasury bill market and what has gone on in the latest auction. Very interesting thing. He says that we should monitor happenings in there for some time, and that will tell us whether this is sustainable or we're going to still see some under subscriptions in the coming months. And so that is in the coming weeks, sorry. And so that is very, very important. So, but that will be all for our market trend segment this morning. We're going to get into our roundtable discussion. And today, like I said, we're talking about inflation. We're asking whether inflation has also or inflation is also fighting back, because we've seen 15 months of decline, and then this is a second month of uptick, and that is something that we should be concerned about, and that's what we're talking about this morning. We want to also have a conversation on whether what that means for your business, what that means for your household, and also for everything that you do. And so very important conversation coming up shortly. Don't go anywhere, stick and stay. Let's enjoy Kofi Kinata's Black Star song. We have a few days to the World Cup. Yes, Ghana's first match is on the 17th, which is exactly I think some 9 days away from today. Yes, so today, yes, it's next week Wednesday. So that is that. So from today, I'm going to be playing you the Black Star song from time to time, so that we can come together, to support the team. And so let's enjoy Kofi Kinata's Black Stars song for this year's World Cup. We'll be right back. right there. I'm sure you've been enjoying it, just like myself in studio. Well, we're going to get into a roundtable discussion very, very soon. But maybe just before that, let me touch on the World Cup. The expectations are very huge. Now, those of you who don't know, we're playing our very first match on the 17th of June. That is next Wednesday, and we are playing against Panama, or Panama, as some people call it. Yes, very, very, defining match right there. If we're able to win, I am predicting that we're going to win by a goal. And I hope that happens. Yes, but that's a match there. Also, then right after that, I think around 23rd, thereabouts, 23rd, we'll play against England, and then on the 27th we play against Croatia. That's a group stages, and that will define. We'll tell where we head next. If we're able to do very well, we can proceed to the next stage, and that is very, very important. So let's support the Black Stars. Sometimes I wonder why some people do not support the Black Stars. I don't know. I personally don't do club football. I only do just national team, and so my full support is with the Black Stars. Like every time there's a match, no matter what has happened and all of that, I still love my country and I love the team. I give them all my support. But sometimes you can see Ghanaians who are supporting other countries against their own country. Sometimes I wonder. I just feel like sometimes it is fake. They are just faking it. But because they ask for your home country, you can't do away with that. Yes. So, but I hope that this Black Stars are able to perform. I know people have concerns about their team and all of that, selection process and a lot of things, but we can only hope. So let's hope that things go well in this World Cup for the Black Stars. So go Black Stars, go. So that is that. We're going to get into our roundtable discussion. My guest will be joining me shortly for our conversation this morning. But enjoy this one. Continue enjoying this one, and we'll be right back. 90 minutes after 9, and Obia Obebabia Obetsin Samia. That is a Black Star song by Kofi Kinata. If Panama comes, Obetsin Samia, Croatia, Betsin Samia, England, Betsin Samia, Obia, Betsin Samia. And so that is that. So we're going to get into our roundtable discussion this morning. And this morning we're talking about the inflation story we are seeing in this country. Now, for 15 months, we saw under subscription, and now we are seeing other levels of. We've seen two increases as well, and that raises an important question this morning: whether we are seeing a temporary blip or maybe it's inflation quietly fighting back. Because for households, businesses, and policymakers, this is not just a statistic; it is the price of food, transport, rent, and of course survival. And joining me this morning is John Kyei. He is a financial analyst, and he joins me to break this down simply and clearly. John, good morning. How are you?
Good morning, Hammond. How are you doing?
I'm doing well. I'm doing well. Thank you. I hope you're doing well too.
I'm also fine by God's grace.
Well, we thank God. All right. Thanks so much for making time to join us. We'll get into the conversation right away because our time is fast spent. So let me start from here. So I want to start very simple. Now, we've had 15 months of decline and now 2 months of consecutive increases. How significant is this development?
Yes, I think the last time I think we spoke, I mentioned that it looks like we have gotten to the bottom, and if we don't, do our best to maintain, be active in making sure, we maintain, the inflation numbers, we will start seeing uptick, and I think it has started. In fact, if you look at producer price index for April, you realize they also went up from 1.6 to 2.7%. So clearly, things are turning back. The only problem I have is that, Bank of Ghana wants to achieve a single-digit interest rate. So once, these pressures are building up, I'm sure it's a great thing they will be concerned about. So, and as I mentioned, earlier, there should be some direct intervention. And I think if you look at what is happening to the current inflation, it's more of local inflation, especially in relation to our food inflation. And I'm sure we know the months we are in. We are in June. The rainfall and everything is affecting the transportation of our food items. So I believe maybe in this month it's going to worsen a bit, especially as we are seeing floods around, and transportation becoming very difficult to transport food items from the villages to towns. So personally, I think the pressures will still build, but there should be some direct intervention from government in supporting our farmers, especially transportation issues, and also cushioning them against losses that would discourage them from farming.
All right, so we'll talk about we'll talk a lot more about that shortly. But should we be alarmed, or is this maybe within the normal volatility of inflation trends? Because the moment people hear that inflation is rising, then the fear is that we are back to square one. Is that what we are seeing?
Yes, we need to be worried. I think because you realize that the war going on between Israel and Iran is even escalating, and today I've seen oil price jumping up again. And looking at, with the current situation, flooding and a whole lot of things, it can go up again this month. So we really need to be worried, especially when producer price inflation has started going up significantly. Moving from 1.6 to 2.7 was significant. So I think we need to be worried, and we need to be very active in suppressing. I heard the finance minister saying that, they want to try as much as possible to, maintain inflation up to 5% to the end of the year. We are within our bracket, but someone will say, oh, but we have, plus or minus.
Rise in inflation.
Yeah, so I think from the Ghana Association, the Ghana Statistical Statistician, I think he mentioned clearly that it's coming from food inflation. We are seeing fresh tomatoes significantly going up. We are seeing charcoal significantly going up. We are seeing ginger significantly going up. So I think what is really driving the inflation this time around is more of food inflation, the food basket that is really moving. And no, for food, it affects everybody. And so that makes it a very significant issue that we need to, pay attention to, especially issues around food, right? As far as, we are not seeing increase in our wages and salaries, and food is going up. So, it's really going to affect everybody. So that is a major concern to all of us, especially when food inflation is the one driving the headline inflation.
So food is the most dominant, right?
Yes, food is accounting for over 54% of the current inflation. So it's very, very significant. Even if you look at, services, it didn't really go up much. And then if you look at, other areas like non-food, also very, moderate. But food saw some significant increase. Even what helped was that, other food items also went down a bit, like fried fish. If not, it would have been worsened.
But could that be seasonal or maybe supply chain related, or are we looking at a deeper structural issue?
So mostly, in relation to food, it's not really more of imported issues where I will complain about, depreciation and the rest. This is more about, local distribution of food, which is really the major problem. As I said, the rain is falling. Farmers are finding it difficult to transport their food items to the urban areas. And so it's more of local supply chain issues, which we need to find a way to address.
So there are no deep, structural issues that are affecting. That is actually giving us what we are seeing.
Yes, the structural issue has to deal with, our local problems, where there are seasons where, food is in abundance, and there are seasons where, food also, food also becomes. So it's more of this seasonal issue of food distribution around the country. There are times that we have surplus, there are times that, we are facing shortages, especially fresh tomatoes. We are not in tomato season. So clearly, that will also increase, especially when demand is still there and supply is, down. And so those ones are that old structural conversation that we have been having about, irrigation. People say, we should be able to plant all year long, but we have not been able to achieve that. And we continue to suffer from this cyclical, changes in the food distribution around the country.
I see. Right. So let's talk about exchange rate and the cedi. To what extent is the performance of the cedi feeding into this inflation movement?
Yeah, so I think even if you look at the imported inflation, too, also went up a bit. I think from 0.6 to 0.9. But generally the cedi has been a bit stable. Just in recent times that we have seen small, depreciation. I think Bank of Ghana has been active on that. I heard that they have announced to increase their intervention from what they projected. So meaning they want to be more, active in making sure depreciation will not be a problem. So I think that one can be subdued. And that one can be subdued, especially when the central bank is really taking active role in that. So if, the problem is really coming from local inflation, then I think we need to do more. Ghana buffer stock has a role to play. The broader way of helping farmers, especially in this season, to bring their products to the urban areas. Because if you look at the regional distribution of the inflation, you realize that, more rural areas didn't really experience that. But look at the urban areas like Ashanti region, Greater Accra, we seriously witnessed high inflation, all because of this, transportation of food items around the country.
I see. Help me a bit. Now, when the currency is unstable, how quickly does that reflect in prices?
Okay, so normally, basically it's more of import issues that normally build it into the inflation. So normally when the city starts shaking and importers are incurring more costs in their exchange transactions, then definitely they will pass on. So most often, if it's going to take them 3 weeks for their imports to arrive, then you will see the increment in their products. Maybe mostly after 2 weeks, because the time that you import product and it arrives, it normally takes about 2 weeks. So definitely 2 weeks. We'll see how that's also going to affect import inflation. So I'm looking at, at the end of this June, when June numbers also come, and we see how inflation will turn out, then we'll be more confident that indeed Bank of Ghana is really playing their role in making sure the depreciation of the city does not affect us so much.
Okay, I see. Now there's also another issue, Would you say, I think last week we had a conversation around the currency, but are we currently at a stable enough point to keep inflation under control?
So I think last week we made mention of some structural problems that has existed for so long, which we need to do something about it. That has not been done. So we are still seeing Bank of Ghana doing the intervention. Now, if you look at gold, you see the last time I explained to you that gold is very volatile. Just, last week, gold has fallen from over 4,700 to 4,200. So gold is also very volatile, and that's what we are really depending on, trying to build our reserves in order to, overcome all challenges that will come against our city. So once we are seeing the gold also falling, you can't 100% rely on it to always shore your currency up. So those basic things we spoke about, issues around owning our economy, issues around, in terms of service, making sure our local people are the ones doing it. Okay, if we are not really active in that angle, and we continue to just pump dollars into the system to, subdue the depreciation of the city, we are not going to really, achieve stability for long. Because as far as, gold prices goes down, that will be our end. So I think we need to, as I said earlier, especially in areas around our exports, we really need to own it. So that at the end of the day, we don't send all the exchange rates and all the forex that we get back to, the owners of those places. We really need to, enhance the local ownership of our export industry. And that is very critical. When it comes to service too, we must make sure that, local content policy is being followed. Where we are monitoring all companies to make sure everything they do, unless maybe there are no substitute locally, we must make sure our companies are contracting local services to do their business. If you're able to achieve that, that is going to really reduce structural issues with our economy, and that can enhance stability better than the current situation.
I see. John, hold on for me. We'll talk about imported inflation. I think that's one of the things you mentioned. We'll talk about that shortly. Let me just announce the lines in case anybody wants to join the conversation. So if you just tune in, this is Business Breakfast on Z101.9 FM with me, Nii Trebi Hammond. And this morning, we're talking about the inflation numbers, and we're asking a very important question, whether inflation is fighting back, because we've seen 15 months of decline, and then now we are seeing we've seen 2 months of increase, and that's something that we should be concerned about, and that's why I'm having this conversation with John. John Kyei is a financial analyst, and he has joined me over the phone lines, and we're having this conversation. If you want to join, feel free, send us a WhatsApp on 0544-321019, 0544-321019, and I'll read your messages for you. Also, you can call us on 030395661, 030395661, and then I will give you the opportunity to share your thoughts with us this morning. We are also streaming live on Facebook at ZFMGH and on YouTube at Z Multimedia. Feel free to drop a comment under the live stream, and I'll read that for you as well. All right, John, let's continue the conversation. So let's talk about global and imported inflation. So how much of this inflation pressure is imported through, say, fuel, shipping costs, and global price changes?
Yes. So, if you look at, the global trend where, the war is escalating, and you could even see that, the dollar itself is rising against major currencies. And because, the Strait of Hormuz is going to be, tightened, that means that shipping costs will also go up. So, I've always been saying that, if there's no way to bring the war to an end and it continues, it's really going to bring a lot of inflation, not just to Ghana, but to all countries. There are some countries that are experiencing serious impacts of this war, especially their fuel prices, their transportation costs. So, as far as the war drags on, things become even worse. Looking at now today, you realize Iran shooting, Israel shooting back.
Yeah.
Unless US tame themselves to maybe do some reconciliation and the thing escalates, oil price is even projected to go beyond $150 per barrel, and that is seriously going to affect everybody. It's going to increase imported inflation significantly, and that looking at our economy where we largely depend on imports, whether machines, whether even goods that we consume, clearly is really going to affect us. I think since the war started, I'm really hoping that the war ends so that these pressures goes down, and then whatever you want to achieve as a country, we'll be able to. But if you are not able to get to that point and the war escalates and things become worse and inflation worsens at the global front, and then economic numbers are projected downwards, that is seriously going to affect our fragile economy.
Would you say that we are still highly, and I say highly with a lot of emphasis, highly exposed to global shocks despite the local stabilization efforts? We seem to be doing a lot.
Yes, we are largely exposed to the international front. The reason is that, you see, one thing you must understand is that, in fact, most of our economies, in terms of investors, are owned by foreigners, right? Foreigners, have pumped a lot of money into our economy. So sometimes when there are some of these crises, they try to pull their investment to a safe haven like US and the other countries. And so once the thing escalates and it gets to, that's why I've always been preaching that it's necessary that we own our economy. If you have a lot of foreign investors into your economy, such crisis will seriously affect you. Again, if you look at the fuel sector, you realize that most of our fuel are imported. We don't really we find a lot of crude for us to rely on. So most of our the oil, the petrol, the diesel that we sell, we import them. So imagining, the thing escalates and prices goes up, we are also going to be affected.
Yeah.
If dollar starts going up, it's also affect us, because the global economy is connected. And in such crisis, developing countries even suffer more, because then investors try to push their investment to safe havens like US and the European countries. So we are largely going to be affected. I think recently I heard the Ghana Stock Exchange even now trying to bring in more foreign investors to invest in our economy. So when such of these crises happen, seriously, look at our oil sector. Those that are into production of the oil sector. It's basically foreign companies. Tullow Oil, they are all foreign companies. They are all owned by foreign investors. So once there's crisis and they want to recalibrate, it's going to affect us. It's really going to affect us. So we have not gotten to that stage where our economy is safe from global issues. We are largely attached to it, and we are really going to be affected.
I see.
The only thing that may save us is that in such crisis, gold prices also soar up. Goes up. So maybe because we are now, we own, especially gold, but through gold, but we now own significant part of our gold. Maybe that's the only thing that will save us in such crisis to reduce the impact.
Yeah.
But still, we'll struggle a bit.
We'll struggle. In which areas will we see those struggles? Is it just inflation?
Not just inflation. There'll be a lot of pressure on your supply chain. Do you get it? So as far as these crises happen, there's one thing people don't know is that sometimes you are not party of the crisis. But most countries have alliances. So when there are disasters or crises, they tend to support each other. And if you don't have those strong alliances, you will be left out. So in fact, it borders around everything as a country, everything. And then we are not getting to that point where we are locally sufficient to cater for ourselves when we are ignored by our foreign partners. Okay, so it's not just about inflation. Our currency will also come under pressure. In terms of even global outlook, where most of the developing countries are normally downgraded. We will get there, and investors will start to shake, and a whole lot of things. So some of these crises, we don't take it for granted. If you are not party to it, but most of in crises like this, developing countries suffer more because your economy is not, too strong in terms of local dependence to say that if there's cut of shipping, from developing countries or some countries, assuming, let me calm down a bit. Assuming maybe there's crisis and country says that, okay, we want to protect what we have. We are not going to sell it again. What do you think will happen to our country?
Right.
Then we are more import dependent. So
I see. Right. Let's talk about the policy side. What are the authorities doing about it? But how would you assess the Bank of Ghana's handling of inflation so far?
I think so far they have been good, but you see, looking at what they have done, it looks like the fiscal side is really helping the monetary side. What I mean is that you realize that, in fact, even the physical side is what is even driving the monetary side to be more effective. Let me give you a clear example. What is monetary policy rate now? Monetary policy rate is around 14%.
14, yeah.
But if you look at treasury bill rate, which has come from the fiscal side, it's around 4 to 5%. If you look at inflation, it's around 3%. All these things are more driven by the physical, which is, making Bank of Ghana more, making their policies more effective, because the fiscal side is not countering whatever the monetary side is doing. So I believe the collaboration between the fiscal and the monetary is working 100%. You see that there are lots of attempts to reduce government expenditure that normally drives inflation. There's a lot of attempt to rationalize expenditure on that front. There's more attempt to reduce reliance on local borrowings, and treasury bill rate even going down so much. So the fiscal side, and personally, the monetary side has not even achieved its objective. Because the point is that we can't bring treasury bill to 4%, inflation to 3%, and then say monetary is around 14. No, they have not gotten there yet. But that their intervention is really working because the fiscal side is giving them the space to easily implement their policy. So I feel it's more of a collaboration between the Finance Ministry and Bank of Ghana, making sure they achieve a particular target to spur economic growth.
So from the look of things, would you say that our current interest rates are appropriate? The levels. Yes,
and I believe it must even come down more because you see, if you have treasury bill rate 4%, and still banks are lending around 13%, 14%, it's too high. And it's coming from the Bank of Ghana monetary policy rate, which is still 14. And that's why they have done a lot of attempt to bring it from 14 down. Because of the inflationary pressures, that is why they have, put a break. But I think they also want to come to the single numbers so that interest rates can come to single numbers. So allow businesses to borrow cheaply and to also, expand and then increase employment. So I think even what we have currently, when our banks are even giving loans at 13.5%, is not enough. We must be able to come down more to single interest rates environment. And I'm sure we will get there as we move on, we'll get there. Especially if the inflation pressures reduce and there's that fiscal space or the monetary pace for Bank of Ghana to come down more.
Right. I was actually going to ask you what will make us get there, but you've added that already. But beyond policy, Or just before that, I was going to ask you whether you believe that the Bank of Ghana is going to, like, tighten, hold, and all of that, or pause. I mean, in the coming months, but we'll leave that for later. I'm sure the Monetary Policy Committee will sit, I think, next month, and then we can look.
I think, and personally, I think they will maintain it. You see, you could see that the objective is to come down more, but they also want to come down more to, spare inflation up, especially when inflation is rising. I'm not sure they will think of increasing. No, that is even out of the equation, because there is that. At the moment, you see that the monetary policy, the fiscal policy, and the inflation numbers are not aligning, and they must come down to align. So that they will rather lead the way, because it looks like now the lending rate is rather leading the way, which is not really economically sound. Right. So they want to come down more. Just that, they want to make sure inflation is anchored well, so that, they don't come down too much for that to also increase money supply to worsen the inflation. So the worst case scenario is that they will maintain it, and they will maintain the rate for this month, and then wait to see what happens next month.
All right, that's fine. Now, but beyond policy, like I said, what matters is direction. Where is all of this heading to? Now, in your expert view, is this a temporary pause in this inflation, or the beginning of maybe new inflationary phase?
Yes. I believe, looking at what is happening currently, is a beginning of new inflation pressures that we should expect, especially when when food inflation is driving the overall inflation, it makes it scary, especially in our environment where flooding issues is happening, transportation of food items from the rural areas to the urban areas is going to even struggle more. So all these factors, if government does not really come in to support our farmers in transporting their food items from the rural areas to the urban areas, we are going to suffer more. This is a time where, the wind is blowing, and you see plantains. I'm sure if I've seen a village before, you see people plantain going down, their products, their farm produce going down, and sometimes they even struggle to bring it to their place for transportation because of how wet the land is, and a whole lot of things. So this is the time that if you really want to solve this food inflation, the buffer stock should, help support, farmers in transporting their produce from wherever they are to the urban areas. Right. If we are very active in that direction, then we can subdue food inflation and stabilize our inflation. So it is important that, policymakers and various Minister of Food and Agriculture, take very active role in supporting our farmers this time around, especially. I'm sure you have seen some roads because of the rain that has become more trouble. There are a lot of places struggling to even, the cars are struggling to even come to the urban areas. Yeah. So we need to really support them in any way possible, whether we are using helicopters, whether we are using any means possible. We must try to help our farmers so that their efforts will not be in vain.
All right. So, what indicators should we watch in the next 2 to 3 months to know which direction we are headed?
Yeah. So I think we need to watch closely. One, oil price. That's a very significant factor. So we need to watch how oil. The war between Iran and Israel. The US will go, and how it's affecting oil price. We need to also watch how government is intervening in the agricultural sector. How active they are in releasing funds to the Ministry of Food and Agriculture in supporting our farmers. If you are not seeing, clear interventions from government, no announcement of, support for our farmers in these times, the flooding issues, getting worse, then when all these signs are showing, then clearly things are going to be bad in months ahead. So we must be active. We have an objective to achieve. We must be active. We must subdue, the current pressures, and make sure that, that overall goal we want to achieve with our interest rates to spur economic growth is achieved. If not, all the stabilization we have suffered and we have enjoyed for the past 1 year will not yield anything to us, especially when we start increasing. Bank of Ghana starts reversing their monetary policy decisions to, increasing it, and the CD is also under pressure. That is really going to mess everything up. So I think Bank of government must really be proactive in supporting our farmers to subdue food inflation.
All right. We hope to see what happens there. But let me announce the lines one more time. In case you're listening to us, this is the Business Breakfast on Z101.9 FM with me, Nii Trebi Hammond. This morning, my guest is John Kyei. He's a financial analyst, and we're talking about the inflation trend. We've seen 15 months of a decline, and then now we're seeing 2 consecutive increases. And he says that this looks like something that is going to continue if we don't intervene. But we're going to touch on a few other things shortly. Feel free to send us a WhatsApp on 0544 32 1019 0544 32 1019, and I'll read your messages for you. And also you can call us on 030 39 56641 030 39 56641, and then I give you the opportunity to share your thoughts with us this morning. We are also streaming live on Facebook at ZFMGH, and on YouTube we are at Z Multimedia. Feel free to drop a comment under the live stream, and I'll read them for you as we proceed with the conversation. All right, John, let's continue the conversation. Maybe a few more things. Of course, I know that whatever the answer is, this has a real consequence. This has real consequences for people on the ground. What does this mean for ordinary Ghanaians in practical terms? All that is happening. What does it mean?
Yes. So I think for this one, it means a lot to all of us, especially as I mentioned, food inflation is everything. You can't survive without food. So it's clearly telling us that, we need to tighten our belt, especially when food prices are going up. And looking at even the items going up, it's something we need it on a daily basis. Fresh tomatoes, everything we do, we add fresh tomatoes. Even garlic. Garlic is increasing significantly. And so I think it's something that is affecting all of us. Whatever budget you did earlier, you need to increase the budget as far as your consumption of food is concerned. So it's a very big problem to us, and I'm sure every Ghanaian wants to see government helping in this direction, so that it doesn't increase our food expenditure too much to worsen our standard of living. Okay, so it is important, to all of us. We are also, I think I went to buy, even currently I went to buy, I think, garlic, and they sold one to me for 5 cedis. I was super shocked. Like, one. I know for garlic, when you buy, not garlic, ginger, sorry. Okay. I know for ginger, when you buy, like, they will give you plenty, even sometimes 10 cedis plenty. But this one, they gave me one for 5 cedis. So look, so you see the issue. It's something worrying. We all suffer, and everybody, struggle with food inflation. So it's something that we are expecting our government to help. Whether they need to support our farmers directly, if it's about transportation, they need to intervene. So make sure it doesn't escalate to a point where it becomes difficult for us to buy. And if it becomes difficult for us to buy, farmers will also lose. So it's a lose-lose for everybody. So there's need for all of us to, especially government is the one with its policies and everything can help in this direction. So we're expecting more, especially for Ministry of Food and Agriculture. I think recently we were complaining about budget release. This is the right time for the Ministry of Finance to support them aggressively in order to, support our farmers and to reduce, this food inflation problem.
I see. All right. What will be the impact on businesses as well? How should businesses interpret the shift in the trend?
Yes. So basically, when inflation is going up, you see, all businesses are expecting lending rate to come down so that, they can borrow more, right? That's what every business expects. But looking at the current direction, if inflation is going up, but definitely Bank of Ghana will intervene by also increasing the policy. And at the end of the day, lending rate also goes up. So it is important that, we bring the inflation down so that, interest rate also comes and then all businesses benefit. Businesses also consume. You have to understand that their cost of doing business also goes up when inflation is going up, and that
Hello?
Yes, can you hear me?
Yeah, I can hear you. Right. Okay. So maybe finally, and then we can go. Our time is up. So what practical steps should households and individuals take in this kind of inflation environment? What should they be doing?
Yes, so I think the main thing we need to do is that we need to rationalize our expenditure. I mean, especially we need to look at the basket of food we buy, look at the ones that, because there are some items too that, I mean, the price has gone down. If you look at cocoyam leaves, if you look at, I mean, so look at, I mean, you can rationalize the things you consume. Are you getting? You can decide to, okay, if price of yam is going up, let me replace it with plantain. We have to be more proactive in that, making sure that we are selecting the kind of food for this season. I'm sure it's not going to for this season. We are selecting the basket of food that the prices have gone down a bit to reduce the pressure on our disposable income. Okay, so I mean, there are a lot of food items that have also experienced income decline. Let's shift to those ones a bit, and then as I mean, government also do something about what is happening to other food items. And when we do that, I mean, to reduce the pressure on our disposable income.
Any advice on savings, debt, and investment?
Okay, so currently in our saving environment, I mean, looking at the current the interest rate, I mean the treasury bill is given. Personally, I'm not induced by, I mean, investment in treasury bills and the rest. But we are seeing, I mean, the stock market doing very well in recent times. I mean, if you have some money, yes. Now, in recent times, the stock market is really doing well. Just that aspect, that space is also a bit risky because it can perform up today, it can go down tomorrow. So there's that mix of performance. But if you're looking at the long term, then I feel you can put your money in some stock and basically focus on the ones that are starting, the ones that have already grown. You can ignore them, but especially the head Casaprecon. There was also Zen Petroleum. So those new ones that have come into the system, we can take advantage of it,
right?
And then invest in them. I'm sure, I mean, we will get a lot of benefit from them.
Okay, all right, John. Thank you very much. Do you have any final words? If not, we can go.
Yes. So my final word would be that, I mean, government. We need our government now. Government needs to really help our farmers, especially in times of this where flood is becoming a serious problem. Our farmers will suffer to bring their produce to the urban areas, and that normally increases inflation. So, I mean, government should be active. There should be more releases to the Ministry of Food and Agriculture. They should be more active in supporting our farmers, transporting their farm produce to the urban areas at a lower cost. And if you're able to do this, we'll be able to subdue inflation.
Right. Okay, John, thank you very much. I'm really grateful. Thanks for making time to speak to us.
Thank you too. I really appreciate it.
All right. Have a nice day. All right, so that was John Kyei. John Kyei is a financial analyst, and this morning we've been talking about whether inflation is starting to fight back. And John says that, yes, it looks like that because there are so many things that are happening that we need to be paying attention to. But a very major part of his call is to government to actually help our farmers, because food inflation is actually, or food is actually what is driving our inflation numbers. Is actually what drove our inflation numbers in the month of May. And so we are looking forward to what exactly is going to happen this time. But very powerful insights there on a situation that affects every pocket, every business, and every household in this country. And for me, I think that this is not just about numbers, it's about livelihoods. And because of that, we'll continue to follow how the story unfolds in the weeks ahead. But that's a for our business breakfast on Z101.9 FM this morning. We're back again tomorrow for some more interesting conversations. But if you miss any part of this conversation, feel free, head to our Facebook. Head to our YouTube. We're at Z Multimedia. You can get to play back this particular conversation so that you get to understand exactly what to do. But for households, John has given an advice for businesses as well. So feel free to go play back so that you can get a grasp of what he said. But so that's how we wrap up. My name is Nii Trebi Hammond. Keep listening to Z101.9 FM. I'll see you tomorrow. Up next is A Brighter Side with Jeremy Okoria Mako. When you think Ghana, please think Z and don't go.